Welcome back to Fast Money. Bitcoin getting wrecked as South Korea's largest cryptocurrency exchange was reportedly raided by prosecutors. Upbit suspected of fraud for allegedly selling cryptos that it did not actually hold. Bitcoin sinking suddenly yesterday, now down about 10% since then. So even though the crypto universe is hoping for a moon boom next week at the major blockchain conference in New York, we thought this would be a perfect time to channel Kenny Rogers for a crypto class on not when to HODL them, but when to FODL them. Our crypto brawler Brian Kelly's over at the Plaza with the lesson. Beeks.
Yeah, sure. Thanks, Melissa. So you want to look at these things and have a thesis going into them. And of course, my view on this entire asset class is, one, it's a brand new emerging asset class. It's a disruptive technology that's going to change a lot, that has the potential to change a lot about what I do every day, a lot about financial services. So that's my general thesis. But when I'm trading, I also have catalysts that I'm looking for. So number one, if you have a catalyst coming up, and the stock or the cryptocurrency is not acting the way that it should or as expected, then you might say that the thesis has changed. That's your first warning sign. Number two, new information comes out. We all know that stocks and currencies move on new information. Frankly, that's really the only way they move. Most things are priced in until that new piece of information comes out. When that new news comes out, you watch the direction of the cryptocurrency, and that'll give you the signal that you need. So if there's new information available, that's number two when you start thinking about FODL. And then always, 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 when I trade, I have a predetermined stop. So I know going into any trade what my risk reward is. I always look for, I risk $1 to make $3. That's the minimum that I will do. So if your predetermined stop is hit and reached, then you got to FODL. So let's just take a look at one example where we did this, okay? We're going to the next chart here, which is Litecoin. Remember Litecoin had this massive run-up, right? That was in December, or November, December. Then we came down, and then we had another little head fake here. So let's clear those out, and let's take a look at this head fake and what happened. And I want to draw a line because you had an uptrend, okay? And you had a thesis that perhaps Litecoin was going to be the test net for Bitcoin, that it was going to have a lot of different additions to it, and so you want to be long. But right here, that's where you had a problem. That's where you start to need to think about FODLing, right, instead of HODLing, because not only is perhaps new information coming out, but now you've broken a trend line. You've broken a predetermined stop area. And it looked like what happened after. We just actually pancaked there. So that's when you FODL. You got to have those three elements going.
BK, what do you do when, I know you want to risk $1 to make $3. What do you do when you want to get back into the trade? So you're out of the trade, you made 3 times your money into Bitcoin. That could happen in 3 days. So how do you know when to get back in?
Yeah, for me, once I'm done with the trade, I divorce that trade and look at it with fresh eyes. So, personally, I'll get back in that same day if something new comes in. I would just reverse that process, right? New information comes in, changes, it gives me a new thesis, and then I have another 3-to-1 risk reward. I'll get right back in. That's kind of just my framework of how I trade. With cryptocurrencies, there's constantly news. There's this concept of Bitcoin time. Everything is just moving so fast in Bitcoin time that, like you said, 2-3 days, the world can change.
Should we invite BK back?
I guess so.
Okay, come on over, Beeks. Ryan will bring the chair in.
Right. Thanks for having me, guys.
Ryan.
Hey, welcome back. Hey, good to have you right here, BK.
Woo. Hey, I'm up high.
So it's Friday. Next week is Consensus, that big conference that we were talking about yesterday as well as just before. Are you going long into the conference?
Yeah, absolutely.
How do you position?
Long most of the large coins. And what you'll see is starting today. There was a conference in Brooklyn, Ethereal. That's the Ethereum conference. But what you'll start to see as people present at the Consensus conference, you'll start to see the coins of the presenters move too. And that's how a lot of people are trading it. But Consensus is a week, Blockchain Week is a time when a lot of new information comes out.
When you showed the chart of Litecoin, it almost looked like every coin. That was the chart of Bitcoin. So, how aggressive are you when you see these outsized moves, almost to play relative value or to take advantage of something that you think's been overbought? I mean, how active will you be? And then you say you stop, you give yourself a stop, but with this kind of volatility, how much rope do you give yourself before you've actually hung yourself too early?
Right. Great question, Tim. So I would say in terms of all cryptocurrencies are highly correlated to Bitcoin. So I almost look at Bitcoin like the S&P 500, right? That's kind of my leader. And if I see Bitcoin moving, then I want to move into the higher volatility coins, maybe like a Litecoin, maybe like an Ethereum. But again, they're all going to trade together. And yes, you know, my traditional money management style in equities and global macro has had to be adjusted a bit because of this volatility. You got to have a strong stomach for this stuff.
Okay, well, what the fuck was that?
That's the song "You Suffer" by Napalm Death.
Oh yeah, that's a whole song? It's like a second.
It's an alert. Whenever the price of Bitcoin dips below a certain value, it's no longer efficient to mine. When it comes back up, it is. So I need to know when it breaks that threshold so that I can remotely toggle my rig at home.
Okay, any idea how often that might happen?
Bitcoin is very volatile, so...
This is so loud.
A lot.